Hello, my name is Pardeep Sangha, Head of Investor Relations at INEO. Thank you everyone for joining us today and welcome to INEO Tech Corp's Corporate Update Conference Call. Joining me on the call today are Greg Watkin, Chairman, President, Founder of INEO, and Kyle Hall, the company's CEO. This call is being recorded. We will be having a question and answer session at the end of the call. You can submit your questions through the Q&A button at the bottom of the screen. I trust that everyone received a copy of our Q2 preview press release that was issued last week. Please note, portions of today's call, other than historical performance, include statements of forward-looking information within the meaning of applicable securities laws. These statements are made under the safe harbor provisions of those laws. Forward-looking assumptions and statements involve known and unknown risks, uncertainties, assumptions, and other factors, many of which are outside the INEO's control, that may cause the actual results, performance, or achievements to differ materially from anticipated results, performance, or achievements implied by such forward-looking statements. These factors are further outlined in last week's corporate update press release and in our previous quarter management discussion and analysis. We provide forward-looking statements solely for the purpose of providing information about management's current expectations and plans relating to the future. We don't undertake or accept any obligation or undertaking to release publicly any updates or revisions to any forward-looking statements to reflect any change in our expectations or any change in events, conditions, assumptions, or circumstances on which any such statement is based, except if it is required by law. And with that, let me turn the call over to Greg Watkin, Chairman and President. Greg?
Thank you, Pardeep. Good day, everyone. We're happy that you could join us, and we hope that you're all keeping healthy and safe, and hopefully cool. On today's call, I'd like to review some of our recent highlights here at INEO. Our CEO, Kyle Hall, will then provide commentary on some of our milestones and provide an update on our sales pipeline. INEO continues to deliver strong results, and I'm proud to say that the company's outlook is better than ever. INEO has a growing pipeline of opportunities, including several large retailers. We're increasing revenue each quarter, and the company is adding to its patent portfolio to increase the size of the moat around our business. I'm pleased to announce that based on preliminary results, INEO is continuing to show impressive growth and is poised to exceed the previous quarter's revenue and achieve another quarter of record revenues in Q4 2022, expected to be approximately 90% greater than Q4 of last year. The company is also on track for record financial performance for the full year and is continuing to execute on its direct sales and channel sales opportunities. Furthermore, despite the recent interest rate hikes, supply chain disruptions, inflationary concerns, and other macroeconomic challenges currently affecting other companies around the globe, INEO has felt minimal impacts and is managing the business well. Indeed, we're experiencing accelerated growth with new pilot systems being installed with large retailers and advertising fill rates increasing with the growth of the INEO Media Network. I'm very proud of our recent customer and sales activities. INEO's sales pipeline has grown from $20 million annual recurring revenue to now over $40 million annual recurring revenue. The sales pipeline is based on the potential full contract value with retail chains who have currently installed or have committed to install pilot installations. In addition to our $40 million sales pipeline, we have many more sales opportunities with retail chains that haven't yet committed to a pilot, and they're not included in the $40 million annual recurring revenue number. These other retailers represent a broad spectrum, including department and automotive stores, pharmacy chains, grocery stores, hardware stores, apparel, and wholesale clubs. Overall, our sales pipeline is in fact much greater than $40 million. The active pilots and commitments with large retail chains has been through both our direct sales efforts as well as through Prosegur, our global distribution partner. Overall, our increased revenues and improving gross margins are assisting our cash flow profile, and we will continue to control our spending expenses and for sustained success. Before I turn the call over to Kyle, I'd like to talk about our expanded product ecosystem. When we completed our public listing in January 2020, we had our flagship product, the INEO Welcoming System. The funds we've raised as a public company has allowed us to innovate beyond our core INEO Welcoming System and expand our intellectual property portfolio, filing new patents, and bringing additional products to market. On June 22nd, 2022, we announced the first dual screen version of our disruptive technology. Branded as the INEO Welcoming System Duo, this new product has an LED display on each side of the pedestal which makes it ideal for large retailers who have multiple doors at their front entrances. We premiered the welcoming system duo a few weeks ago at the National Retail Federation Protect conference, where it garnered tremendous interest and was a resounding success and a key driver in landing commitments for pilot installations with several large retail chains. To protect our innovation, we filed a design patent on June 28, 2022, entitled Electronic Article Surveillance Pedestal with two-sided display for the welcoming system duo. The patent filing protects the unique form factor, design, and materials used in INEO's new dual screen product. We now have a complete suite of products that are integrated with each other inside the retail store. Our full product line consists of the welcoming system, the welcoming gate system, the welcoming player, and the new welcoming duo system. With our extended product line, we can now provide an entire suite of products. For example, we can deploy a mix of welcoming systems and welcoming duo systems at the front of a retailer where there are multiple doors, such as what you might see at a Walmart or a Target store. For smaller entranceways, we can install our welcoming systems and welcoming gate systems. And throughout the store, we can just deploy our welcoming players. The advertising and all the display screens is managed by our cloud-based INEO media network. These screens could be displaying the same ad throughout or different ads on each screen, depending on the retailer's preference. The advertising can also be customized based on store traffic demographics. We do all this while maintaining the integrity of the theft prevention capabilities for electronic article surveillance and customer traffic analysis located within our products. The key here is that our expanded product suite provides us with increased advertising visibility and, more importantly, increased revenue opportunities at each retailer. With that, I'd like to turn it over to our CEO, Kyle Hall, who will provide some commentary on our recent business highlights and discuss our sales pipeline.
Great, thanks, Greg. Pretty pleased with the milestones we've achieved so far this year, as Greg outlined. I want to start off today with talking about our advertising, our fill rates with our media partners. So our INEO's advertising fill rates have increased tremendously on the INEO media network. Brands are choosing to add INEO in our media network to their advertising mix due to our unique ability to give advertisers access to the retail customer at the in-store channel. We're pretty unique in this regard. INEO is continuing to capitalize on this opportunity, and as the company expands the footprint of the retail media network, we're expecting to generate increasing revenues through the second half of 2022. Just to recap a few of the announcements that we had, on June 7th, 2022, we announced a strategic advertising partnership with Western Media Group to market INEO's digital out-of-home advertising inventory to brands and advertisers. The partnership is already boosting the company's ad sales efforts, as Western Media has been selling placements on our network with well-respected national and regional brands. On July 13th, INEO launched our largest advertising campaign in the company's history with Return It. Return It's a federally incorporated product stewardship company that's in charge of the beverage container management program in British Columbia. The advertising campaign is a result of the partnership that we announced with Western Media Group. And the Return It campaign itself is filling increasing our fill rates considerably, which is really going to be the one main driver for the second half growth in advertising revenue. Also pleased to announce that we've recently hit a milestone of 30 major brands, like major big brands or advertisers who have utilized the power of the INEO media network. We have many smaller advertisers, but having this list of large players choosing to spend some of their ad budget with us is quite invigorating for us. You can see a sample of the advertisers on the slide. The advertisers come from a wide variety of industries, including liquor and beverage, government, telecommunications, food, entertainment, and some retail. Earlier this week, we also announced an additional media partner, Broadsign, who is a leading provider of digital out-of-home programmatic advertising. Marketers and brands who utilize Broadsign screens for advertising will now be able to purchase space on INEO's media network on screens located at the front entrance of retail stores. In addition to Broadsign, INEO is now partnered with several media partners, including Vistar Media, Hivestack, and Western Media Group that I mentioned. With these agreements in place, INEO will gain access to a broader group of brands and marketers who will now be able to purchase INEO's unique advertising inventory. And with these advertising partnerships in place, it really solidifies us as an emerging solutions provider in the digital out-of-home advertising market. I'd like to talk about the business model a little bit, clear up a few things that we've been getting some investor questions on. As shown on the slide, the brands and advertisers can place their ads with the retailer either by going direct to the retailer or through INEO and one of our media partners, such as Hivestack, Western Media, Broadsign, or Vistar. Depends on the retailer preference. If the retailer has their own media network in place, it is easy for them to fill the ad space themselves. If they don't, INEO has built relationships to fill the space with our own advertising efforts. To give you a bit more color on the retail advertising business, I wanted to highlight how retailer-owned media networks are helping to drive our business at the moment. At the large end of the scale, you have Walmart, which recently announced that they generated $2.1 billion in revenue from their own media network in 2021. A good retailer with a smaller footprint, Nordstrom, announced that they did $40 million in advertising sales via their own media network. The research firm eMarketer also reported that almost 20% of all digital advertising, or close to $50 billion, will be spent directly with retailers in 2023. This is a massive wind in our sails, as almost all of these companies, all of these retailers are saying that the next expansion of the retailer media network is the signage in the stores. And with INEO, we've coined a new phrase as the new face of retail media, with our welcoming system being the first signage that the customer encounters at the front entrance of the store. We're well placed to take advantage of this massive trend that's actually changing how money is being spent in the advertising industry. But to focus on this slide, to focus on a business model, we've got two revenue models at play. The first is when INEO selects, when INEO's direct sales team is responsible for the relationship with retailers. So we've landed this retailer ourselves, we've signed an agreement with this retailer. INEO will typically receive anywhere from $500 to $1,000 per month. The range depends on the number of systems that we've installed, whether we have duos installed, whether we have other media players installed, that type of thing. But the base end, it's 500, and it's we're looking at 1,000 or more depending on how many systems actually go into those stores. When we do it directly, we're responsible for the manufacturing and this installation of the hardware, and so our gross margins in this case will be in the 55 to 60% range. The second revenue model is where we land the customer through our global partner, Prosegur. In this case, Prosegur is responsible for manufacturing and installing the hardware. Hence, we'll only receive about $300 to $500 per month per store. But at this point, we're provisioning online services. We're running our online software, the media software, the analytics software, and we end up being a pure play SaaS company at this point for this part of the relationship. And as such, the margins are going to be quite high. They're going to be probably well over 75%. I want to talk then a little bit more about the depth of the sales pipeline. As you saw from our press release, and as Greg just mentioned, our sales pipeline has grown from 20 million annual recurring revenue to now over 40. This pipeline only includes retailers where we have a contract, a pilot installed, or a committed pilot. The actual number of retailers we're talking with directly and through our partner Prosegur is much greater. For our direct sales pipeline, if you look at the deals that we have in place there, so I'm just trying to move it to the right part of my screen here. Obviously we just mentioned Staples, but we're also dealing with, and we've alluded to this, a preferred vendor agreement that we've signed with a Canadian Franchise Dealer Association representing 500 stores. We hope to be able to get the approval to announce this agreement shortly, and at least we'll inform you of where the initial store locations are. We also have a pilot system already, multi-system pilot already installed at a Surrey BC location of a Western Canadian retail chain, grocery chain that has 175 locations. We announced Fields, the 60-store rollout with them previously, and we're expanding the liquor store network again. We kind of settled in for a while because we had too many things on our plate, and we hadn't increased that number much in the way over the 140 stores, but we started installing some more liquor stores again, especially since our advertising fill rates are filling up. We can actually, we're generating cash flow out of that. So it's worth it for us to do that again. For the Prosegur channel, we now have pilots installed or committed in 5 prominent US chains in multiple markets, including supermarket, clothing, department store, and warehouse club. In addition, Prosegur has landed a Canadian agricultural supply store. Hope you'll announce something on that shortly, a global sports franchise, and a Colombian supermarket chain. We have installed 5 systems within this Colombian supermarket chain at this point in time. Pretty happy with the progress Prosegur has made. They really, we signed it in November. We've got their sales teams on board. We've done 2 trade shows with them now, and they are out pitching, keeping us very busy, following up on leads and opportunities and where we're presenting. So anything we've included in the pipeline are opportunities that I personally or one of our sales team has co-presented with Prosegur people. We've talked to them directly, and we're moving through. So a lot of the retailers around the globe that they presented to aren't even in our pipeline yet because we haven't directly been involved at this point in time. Our pipeline is over 7,000 locations directly and through Prosegur. At this point, the gross pipeline, as I say, could be much larger than that, but we're only including the chains that are, signed to agreements, have a pilot installed, or are committed to a pilot. And when we, just to clarify the 40 million for a second, it's really the full value of a contract if that retailer rolled out to all locations. So that revenue is not revenue that we're saying we're getting next year. Typically, the retailer will take 2-3 years to roll out to all locations. We'll get a good chunk of them in the first year, but it'll take a year or two to roll these things out. So once we have the pilot installation, we feel very good about our ability to land the full master services agreement with the retailer and roll out to the rest of the stores, because we still do not, there's no competitive product in this market. We have this space to ourselves. We have a new business model that works for the retailer. It works for us. And it's given us a lot of momentum out there. Our customers are really telling us that we have a truly unique product unlike any other. So just recap here on the outlook. The overall outlook of INEO remains very positive. The company has now entered in the next phase of our development and commercialization of the technology. We landed big wins with large retailers and ramping up our revenues. INEO's short to medium term strategy is to continue to invest in R&D, invest in customer deployments, and sign strategic marketing relationships, all to create a critical mass of systems on the INEO media network. Our technology has been proven out through the independent liquor store network and has now been validated by the global partnership with Prosegur and also with Staples. INEO has created a healthy sales pipeline consisting of both direct sales customers, Prosegur's customers from North America, South America, and Europe. And INEO has seeded the market with trial systems, and we expect to convert those trials into full-scale rollouts in the coming quarters. Once we land a pilot with a retailer, we're very confident that we can turn that into a customer. Again, no competitive product in the market. Typically, we expect to turn a pilot into a trial. Next, a pilot goes to a trial of a handful of stores, and then roll out to a geographic region, and then a larger rollout over the retailer's whole network. It's a methodical process, but once it starts moving, it just starts moving, and we will have the momentum and the performance of the company. We know how to do this. Despite the current challenging macroeconomic environment, INEO has experienced an increase in our sales activity and advertising fill rates. We're in an enviable financial position with a clean balance sheet and revenues beginning to ramp up. We look forward to announcing more customer wins in coming quarters and leading to a substantial increase of the INEO Media Network's footprint. In summary, I'm very optimistic about our outlook. And we've got unique distribution partnership with Prosegur, numerous customer trials, and a large pipeline of additional opportunities. Before we take questions, I just want to provide a little additional commentary on our current share price. As most of you on the call are aware, our share price experienced a substantial decline over the last 3 months. We do not believe this drop in our share price is warranted given the size of our sales opportunity and our positive future outlook. Our current market cap of approximately $11 million is not reflective of our opportunity and is overshadowed by the size of our sales pipeline, which is over 40 million. We keep mentioning that number, but I tell you, we're driving to that number. Our recently signed agreement with Staples and preferred vendor agreement with a Canadian name brand retailer is further validation of the progress, and it's not represented. The progress was there is not represented in our current valuation. We believe that general poor capital market conditions are the primary cause for the weakening of our share price, and small cap tech stocks have suffered the worst in this market correction. With that, I want to thank you all for joining us today on this call, and we look forward to updating you at the end of our quarter when we announce our audited results later this year. But for now, I'll hand it back to Pardeep to take some questions.
Thank you, Kyle. We'll start with analyst questions. A question from Gabriel Leon of Beacon Securities. What's the feedback you've received from Prosegur pilots, and what's the timing on some of those expanding as well into deployments?
Yeah, feedback is great. One of the Prosegur sales reps said it best to me is like, you give somebody a new puppy, the puppy always stays, right? And we give them one of our systems, and you get the new technology, you get the new features. They don't come out. Our systems stay there, and of course, then it gets into the business model discussions, and how are we going to conquer this on a larger scale? And so that's where we're at right now. If you look at the timeline of these things, it's typically you get that pilot, it's 3 to 4 months to get another group of stores, and it's 3 to 4 months to go to rollout. So, signed agreement in November, really got underway in January to March timeframe, and then the pilot's been going in. So we're looking at calendar Q1 next year for those to go to scale, and we'll be able to hopefully announce more then.
Last question from Gabriel Young. Have you seen any changes around the competitive environment? If you can comment on that.
Nothing yet. The patent that we have is so strong. The utility patent that Greg produced on our product, it covers just the simple combination of a screen. Forget about the technology that we have inside. It covers the combination of a screen with a loss prevention device. And so that really locks in that space at the front of the store for us. So we saw a competitor at a trade show, one of the trade shows we were at, that had a traditional system, and then they had a public display monitor kind of located 5 feet away, saying, hey, we can also run a monitor with some advertising on these things, but it was far enough away from the system that it wasn't interfering with it. And they didn't have to build the technology to do it. It was a little bit hokey in our opinion, but that was the first glimpse that we had that they acknowledged what we were doing. We'll have to see where some of that goes, but we think the time is here for retail media to really take off, and we plan to utilize our technology as fast and furious as we can at the front here. Greg's alluded to it a couple of times as a bit of a land grab. We need to get these pilots, we get these systems out there. We have to get more into the market to really cement our place as the first advertising screen people see as they enter the store. Great.
A question here from Daniel Rosenberg of Paradigm Capital. Can you give us some more details regarding the expected conversion rates and time, and get some more details on what you mentioned, 2 to 3 year rollout of taking your pipeline into installed and operating systems?
Yeah, people that know my history know that I did this in a previous company with online photo, and it was always methodical with these large retailers. You got a test region, you got a group of stores, and then they went region by region. At one point, we had one big retailer that came to us and said, we want to do 6,000 stores, we want to do it in 3 months. And we went, whoa. And we launched on that. It still took 9 to 12 months, even though they had the whole organization behind it, and they were a little behind other retailers, and they went through it. There's just a lot of things that play with these large retailers. So I don't see the likelihood of a large chain getting things done inside of a year, but inside of 2 years, yes. And some outliers within the 3 year time frame. We're replacing equipment that's in store. We're reworking business models. Marketing will drive this. If marketing decides that they can make a lot of money out of this, they can help their sales in their stores, those timelines could be increased over what we saw in typical in my past life and what we're seeing at this point in time. But at this point, we're cautioning everybody at the outer end of our scale, because we don't want to, we want to be able to over deliver on that.
Right. Follow-on question from Daniel Rosenberg of Paradigm Capital. Just some color on terms of your direct sales people that you have. What's your team look like? Any plans to expand the team?
We don't. ProSecure is doing a good job out there right now. We've developed enough direct relationships ourselves. The size of the team, if you include me in the team, is 4. I spend a lot of my time in that side of the business, of course, and I don't think we need to go any bigger than that right now. And we talk about the size of INEO and the headcount. We like people that develop capabilities. On the development side, in Greg's team, we need people that can deliver. And right now, the sales team is giving more than enough opportunity to the company. I don't think we need to increase that much more, especially with ProSecure and the number of reps they have out in the road.
Yeah. Here's a question from Mike Stevens of Echelon Partners. This might be a great question. Can you comment about how the ads are being displayed? Are they typically created specifically for this medium, or can the ads be run elsewhere for the brand?
Yeah, it's a bit of both.
Maybe like Greg answer this one.
Yeah, sorry. I just keep talking, guys. Apologize.
No worries. Yeah, it is a little, as Kyle was starting to say, it is a little bit of both. have content which runs on our devices. We create some of the content, we get some of the content from our customers, and it could be static content that they provide, it can be animations, it can be video, and it literally is any type of content is displayable on our system and on other devices. And we've got a creative team which is able to generate some of that content for some of our clients as well.
Right. A question here from Philip Rocheleau. I think this is probably more of a great question as well. Not every retailer uses EAS products, but they could be interested in having analytics and ad revenue from welcome systems. Can you just comment on how that might be used and how you can sell such just the, I guess, analytics in the future potentially?
Yeah, our initial thrust has been on existing EAS customers and the large ones, I would add to that. It's our intention to expand beyond that. Really, what we're providing is we're giving the ability of the retailer to rethink the way that they've deployed systems or haven't deployed systems, because yes, there are a certain percentage of retailers that haven't adopted EAS, and probably the biggest obstacle for them has been cost. So we've taken something which is a sunk cost to them and turned that into a revenue source for them and for us at those locations. So the opportunity is absolutely there for companies that aren't, or retailers that aren't using EAS today, to be able to expand and use our system with or without EAS in it, but certainly to turn it into a revenue opportunity for everybody.
Okay. Question from Chris Thompson of PI Financial. Can you comment about the ARR, I guess annualized revenue run rate or annualized recurring revenue, could be either of those. Might you expect that you might expect once the 40 million pipeline is deployed? So I guess he's talking about once the full pipeline is deployed, what kind of revenue would you, ARR would, I guess I'm thinking he's probably talking about per customer or per location.
Yeah, so again, there's going to be a range on a per location basis, depending on the number of screens, the type of product, whether it's the single welcome system, the duo, or the players in there. So it would be a range that, depending on the retailer. Some retailers have a very concise, clear one door opening that is entrance exit. Some have multiple entrances, multiple exits. So it depends on the number of screens, also the amount of traffic they have in the store, right? Because that's also at play in terms of the revenue that you can generate from advertising, depending on it's also very traffic dependent. In terms of the overall pipeline, then it's us getting the number of stores, and then whatever that mix is, we'll be able to dial in. A year from now, we'll say, okay, it's not 500, 1,000. We're at, or the range is still there, but we're averaging, 699 or whatever that number is, right? To start giving you more detail. We don't have that information yet, right? The big pilots that are out there are still under discussion on how the final rollouts are going to be. We know what it is for our liquor store network, which has been operational for almost 3 years in our proving ground. But on a large scale, we haven't disclosed any of that information yet. And truly, we're still in those early stages of knowing where it's gonna land. Yeah.
A follow-up question from Mike Stevens from Echelon. Just if you can comment on the lack of competing products. What is the biggest challenge to scaling faster? Internal resources or manufacturing capacity, or what is really the challenge for scaling faster if there's no competing products?
Yeah, the competing faster is just getting attention from the right people at the right retailers, getting the right people in the room. We've been pretty good at getting presentations to the loss prevention people, because that's directly where the product is. And then, of course, we have to cross over to the marketing folks to make sure that they're on board. And so some of that's just, getting FaceTime with the right people in the big company operations. Making sure that we're a priority for them versus just nice to have at some point. We don't see any challenges at the moment in terms of production, manufacturing, shipping that components. We've spent a bit of money to stock up on parts so that Greg needs them. He's got them. Supply chain is a challenge, but we're ahead of it there right now. We're doing what everybody else, and Greg says we're doing what everybody else is doing. We're contributing to the situation by hoarding products or parts as much as we can so that we have what we want to build at the right time. So I think it's just process for this time, right? Some of it just takes a little bit of time.
Right. A follow-up question again from Mike Stevens of Echelon. Can you provide some more details on the data analytics? Does the retailer get access to the data analytics within the revenue model? So within the $500 to $1,000 a month for direct, or $300 to $500 a month, is data analytics included in that package?
Yeah, I'll take it, I guess. Yes, it is. We utilize it as a negotiating chip to get the right price in there. So if we're getting the right price, it's just included in the price. If the initial discussions haven't gone quite where we want, and we need a little bit more, we throw it in as an add-in. We've termed we've kind of termed it as an optional feature, but everybody takes it at this point in time, right? So it's an optional feature, but everybody's taking it. And I tell you though, the market being with what's going on with retail media networks, the focus of the retailers is gone from that being a really cool feature that they're interested in. They're all about the advertising right now. It is really about the advertising and the placement of that. And it's almost like our analytics is secondary. And so we've put a fair amount of effort and R&D into it, but we're going to come back around to it. It will have its time again, and it will be very important to us at some point in the future.
And this is probably a great question. Some questions around the Czech facility in Czechoslovakia with Prosegur, and just commenting with regards to just the manufacturing in total capabilities, and about a couple of questions like that from several different people here. So maybe you can just comment and update on the manufacturing in general, Greg.
Yeah, certainly. Manufacturing, we have our 2 locations for being able to do manufacturing. The Czech Republic, where I was last fall, we've completed the technology transfer for them to be able to produce products for the European market under license over there. In North America, the products are going to be produced within the footprint that we've got here. We're quite comfortable that with the facilities that we have right now, that we can be producing between 2,000 and 3,000 gates per year, systems per year, without expanding our footprint. We've focused a lot of building our manufacturing processes from the ground up using lean manufacturing. And we produce on demand. So we're comfortable that we can meet the demands from our customers and be able to supply that within the existing facilities that we have here today.
Okay, we've had a couple of questions here from various attendees regarding financing and whether you need to do any additional financing to fund the growth of the business.
Yeah, capital requirements, they're not high because of, we've got small staff. The partnership with Prosegur takes a lot of the pressure off us in that regard, as they are going to fund the hardware that goes into their accounts. That said, we've got some direct sales opportunities, right? And we're evaluating our capital requirements for those. If we go to the capital markets, it's because we've got a tremendous opportunity. If we need to raise money and we go to raise money, it's because it's a well thought out case, because it's better for us to do this ourselves than do it with our partner Prosegur. And so that's where we're at right now on it. There's that decision on how much do we do ourselves, or how much do we do with our partner. Partnership is great. We like it. There's nothing negative going on there. It's just we've developed some good opportunities on our own at the moment.
Okay. A question from Sam Namiri. For your pilots, what are the retailers testing, and what are they looking for in the pilots? Any sort of feedback on that in terms of the conversion of pilots and what you're seeing there? Yeah,
the kind of the check boxes that have to go through is, first, are we as good as the incumbent on the loss prevention side? And that one just we just check that one off pretty easily. Yeah, we place our systems, our technology is better, it works better, all that type of thing. We add in video capabilities. So the first checkbox that's put in there. Second is, we work through the organization to make sure that our systems behave properly on the corporate network, that security, all those types of things are where they want them. We know security within retail infrastructure is a huge thing. So there's a lot of work that goes in on that side. The next is service and support. Are we able to keep monitor the systems and do what we say we're going to do, and in terms of making it a better situation on service and support, and when they need service that they don't have to call somebody. We do most of it through our online connection, through our online dashboard. And then the next one is, of course, gets into the media side. The impact of the systems in the stores, how they're perceived by the store staff, how they're perceived by customers. And generally those ones go fairly well. And I would say the last one is then getting that right into the business model. How can these advertising funded systems perform in terms of generating the revenue? So I think that's kind of the logical list that we go through. There's obviously a lot of detail in those to make make it go from concept to rollout. But I hope that gives you enough color.
Right. So I think that's about all the time we have right now. Kyle, and Greg, thank you for your time today. Kyle and Greg, if you have any closing comments.
Thank everyone for joining our call. We really appreciate the time and effort you put into learning more about us and following us. We want to thank our shareholders for sticking with us. We expect brighter things to come, and we look forward to speaking with everybody again when we announce our audited year-end financials.
Yeah, and I'd like to thank everybody for joining us today. Lots of exciting things going on here at INEO, and we look forward to being able to share more information with you in the fullness of time.